The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the February 10th terrific Tuesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes, who knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there had a magical Monday. Let's make sure that you and I, that we do everything we can to have an extraordinary Tuesday. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. That's the old 2x4 exchange there. When we make that, it means that you and I, we can find the gift in every set of circumstance that the universe is going to throw at us. That's what this show is all about. It's really all about, well, whether it applies to the markets or just life in general out there. It's always about being able to find the gift in every set of circumstance. We're going to go take a look at that in each of the stock charts that we look at, whether it's commodities, currencies, futures. It really doesn't matter. Most important thing, though, is for you to know that I'm grateful for your presence here today, and I'm here to serve you. That means if you'd like, you can call on in at 877-927-6648. Internationally, you can reach out at 727-445-1044. Together, you and I, we can go hunting and pecking through a chart. Take a look at where things may be headed to on whatever time frame it is that you trade on. Of course, this is Terrific Tuesday. None other than Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show right now. Dow Futures trading up 107 points. They're trading out at 17,788. S&P futures trading up at 13 and a quarter, trading out 2,056. NASDAQ up by about 26 points, trading at 42.40. Russell's up 7 points or so, trading at 12.01. The king of dollares is on the move, up 300 ticks this morning, trading out at 94.85. So we got movement in the currencies. We got movement in the hard currencies. Gold's back $5, trading at 12.36. Silver's down 15 cents, trading at 16.92. Light sweet crude is off 60 cents this morning, trading out at 52.27. A quick peek across the globe out here. We're going to find over in Asia last night, a little bit of a mixed bag. You had the Shanghai up 48 points, 1.5% out there. A quick peek in on the Shanghai. Really just been consolidating, much like all the markets around the globe. Well, with the exception of the DAX. The DAX is one that has really not been consolidating yet out here. The Shanghai most certainly has. I don't see anything wrong with this chart. It just looks like the rest of the markets, most of the markets out there. In fact, let's just take the day off. Let's just take the day off. Hey, how's that sound to you out there? We'll make it well, it can't be a weekend, can't be a 4-day, but it can be, we'll just make hump day a little bit early out there. Now, let's not do that. That would be no fun. If we take a look at the Nikkei was back 59 points last night, down about 1/3% out here. As we take a look at its stock chart, really no big deal out here inside of the Nikkei as well. Of course, it is consolidating ever since that October 31st move by the finance ministers, by the central bank in Japan out there. Just consolidating up at these highs. If we take a look at the Hang Seng as well, that was up 7 points last night, so totally flat out there. Again, also consolidating up at these highs. Now, this has only been consolidating since the middle of January 21st to be exact out here. So this stock chart looks pretty good. Speaking of the DAX, not that I was speaking of it, but let's go take a look at it. It's up 116 points, up 1% this morning. The DAX, what we know about the DAX, it made that 1-to-1 A to B equals CD to the upside. I believe that what the DAX wants to do is make more than a 1-to-1 A to B equals CD. Remember, in that pattern there, your 1-to-1 only takes place about 60% of the time. What you and I need to do is just become experts of that C to D leg. We just want to master that because that'll help us to understand where prices are going to head to. I believe the DAX is headed up to the 11,429 area. We'll know for sure about that as once it clears that little shooting star that took place on February 3rd. That high out there is 10,984.69. Once it clears that area, boom! It's off to 11,429. If we take a look at the FTSE, of course, you and I know that one of our eyes is always glued on the FTSE out here, because this is the chart that will probably, between the FTSE and the IWM, and it'll be one of them, it helps to lead the markets to move higher out here. That's just simply a break of the consolidation level. It's not there just yet, but it's on its way to at least test it. That'll be up at that 69.04-ish level. Any close above 69.05 with any kind of conviction, you'll have a long-term breakout inside of the FTSE. It's a doozy as well inside of the FTSE. If we take a look at our markets, what are they doing out here? Topsy-turvy. If we go back and take a look at the ES Mini, yesterday we pointed out, Friday we pointed out, today we're going to go ahead and point out that 2062 level is very important inside of the ES Mini. Why? Because it's acted as resistance. Likely going to be tested again today. If it gets surpassed, what you're going to see is a move up to those December 29th highs out at the 2088 level, 2089. That's going to be important, because if you cross above 2062, you stay above 2062, you got another 25 points or so to run to the north before it provides us with any information. What do we know about the S&P futures? Hey, they have not been able to bust out the lows. No reason for them to not go and try to bust out the highs. Retracement wise, if you go from that beautiful low that was made, that beautiful bottom in October, a natural occurrence inside the markets, those bottoms that are formed in October, what we've only seen is a 0.382 retracement. You know, this says that the ES Mini could really be making a huge A to B equals CD to the upside pattern. That A to B equals CD, your A point's going to be that October 15th, 16th type low. Your B point out here on December the 29th. And then your C point all the way back here, I'd use, what are we going to use? We're going to use the one from January 16th out there. That gives you a price projection of about 2254 out there. Any move above 2088, and that is what we will be looking at inside of the S&P futures. If we go take a look at the NASDAQ futures out here. What are the NASDAQ futures doing? Well, like all the other markets, again, just traveling in a sideways consolidation pattern. What the NASDAQ is doing, though, it's testing its most recent swing point, which takes us back to January 23rd. That low is 42.50 and a quarter. So far, the high this morning, 42.49.50. So it's just waiting. It's just waiting. It wants to go test that wall. If it can get above that wall, the next move ought to be up into, I don't know, why do I have the 42.97 level out there? It must be on a weekly basis. I'll bet that's a weekly move out here. Let me put this on the weekly chart, take a quick peek at it. Yeah, no, I don't know what the heck that is, but we're going to go back to the daily time frame. I'm going to delete it because I don't even know what I put up there. Must have moved something. In any event, any move above the price point of 42.86. That's the high from January 23rd. And then we go move out and we test out the November 28th high inside of the NASDAQ. Now, because of its long-term consolidating type pattern, that's probably what I had up there about the 4,300 level. We'll just simply use a close above 43.42. That'll be a fairly large consolidation, 275 points or so, somewhere in that range. That would, you just add that 275 points to the 43.42 out there inside of the NASDAQ. But first, it needs to clear that January 23rd swing point. This is the daily chart that we're taking a look at. If we go look at the daily chart for the Dow is about to, I imagine that today it's going to get it back up and try to test that 17,864 level. 17,864, that happens to be the swing point high from January 9th. And that level was tested. It was tested a couple trading sessions ago. It was rejected. Any kind of reversal candle? Absolutely not. Just a high wave candle. That high wave candle out there, sometimes confused with a doji. That just simply says the market lost its way. So it lost its way. It pulled back yesterday with what kind of volume? Hello? What kind of volume did you say? Yes. Very light volume out there. So the sellers seem to have evaporated. They're gone. Maybe they're going to come back. But at this stage of the game, they certainly weren't there yesterday. Now what the Dow wants to do is go take on those highs again. If it can clear that, that's going to go ahead and send that Dow up and test that December 26 high in the 17,988 range out there as we take a look at the futures contract. Hey, It wouldn't be a day if we didn't go take a look at the Russell 2000. This chart here delayed by 10 minutes out here. The Russell 2000 was the first one up to test its swing point, its all-time swing point high. Of course, it tested the low of that swing point. That was December 29th. That low was 1209.50. We got up there on Friday. We rejected. I believe that it came in there with about the same kind of volume. But the problem with that is you're dealing with December 29th versus February the 6th out here. So it's really hard to truly gauge the volumes out there. But likely what we will see is another run, another attempt, and any close inside 1209.50. That says you're going to go test that high at the 1220.20. 2020 vision inside of the Russell 2000. Now let's go take a look at the currency market out here. Let's go take a look at that King, a 10-minute delay inside of the King dollar, the U.S. dollar index out here. Of course, each of you know that this is nothing more than a basket of currencies, with the euro being the largest weighting inside of the U.S. dollar index. Nonetheless, you got to take a look at all of them. That'd be the pound. That would be the oh, man, I'm going to lose it all here. You got the euro, the pound, you got the yen, you got the Swiss franc, you got the Swedish krona, and you got the Canadian dollar. We can't forget about the loonies out there. What do we know about the U.S. dollar index? It made a 1 to 1.618. A to B equals CD. It completed that pattern right here on January 26th. Has basically just pulled back. It hasn't made much of a retracement at all out here. I don't know what this is doing, because when I take a look at the euro, I don't know what it's doing either. I don't know if any of you know what it's doing. If we go take a look at it, it's basically just been consolidating at its lows out here. It looks like it's trying to form a bottom. It smells like it's trying to form a bottom. And right now, what it's doing, it's testing the swing point. It tested it yesterday. That was the low of January the 26th out here. It actually tested the high of that swing point low, which was at 1.1295. Yesterday was a test. It was a rejection. Looks like a little doji candle. Do doji candles have any meanings at the lows or in the middle of a move? And how do you even know if it's the middle of a move? Basically, how about in the middle of a consolidation? No, they got no meaning whatsoever. In fact, you can just kind of, other than saying it's a doji in your window, that's about it. It really doesn't have any kind of a meaning out there. Today, we're seeing another test of that area. Any close below 1.12958, well, then that's going to send a test of the lows out there. Most likely, that would be at the 110.979. Should this be shorted? Nah, I don't think so. This should have been shorted a long time ago. Now is not the time to be shorting it. In fact, on a weekly chart, we're now, at February the 10th. And what if we put this on a weekly chart out here, which I will do, what I can tell you, it takes place inside of the euro. It has worked like the last, I don't know, the last 15 out of 16 years. Probably more than that, but at least the last 15 out of 16 years is right around the end of December, the early part of February. The euro tends to make a significant swing point. In this case here, it's been moving down. So it says to me, knowing that that pattern is out there, knowing that there's a high probability, that's what says to me that the euro is trying to form a bottom. That would say the U.S. dollar index is trying to form a high. Does that have any relevance to the market? Not so much. Not so much. You got Goldilocks is back $5. You got the U.S. dollar index up. Maybe there's some correlation. If there's any correlation, that would be the one where it's at out there. Right now, Dow futures, they're trading up about, I don't know, let's go see here, 97 points. S&P futures up 12. We will be right back.
Told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of TigerTV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of TigerTV, then visit TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We were taking a look at the euro just before we went to the break. Let's take a look at euro, Japanese yen. That's the currency pair you got to keep your eyes on. If we take a look at it, it's trading out right now about the 135.03 area. They've got a 15-minute delay on this as well. We can see that little consolidation here along the bottom. What I'm really looking for are clues, clues as to whether or not the consolidation will come to an end or not. Will the market actually break? And, even with the futures being up as high as they are, so-called as high as they are, this is just a continuation of that little roller coaster ride that we have been on. A little something for the bulls, a little something for the bears, just enough to frustrate the heck out of traders out there. During consolidation, so important to be able to identify those. Number one, because then you can anticipate what's going to happen. Of course, you want to maybe sell those consolidations from the top of it. You want to buy it from the bottom and be willing to, because at one point in time, you're going to see a break of that area. From that point, you take your stop and maybe reverse the trade out there, especially if the consolidations are large enough, which they are. That's why I take a look at the FTSE. That's why I'm watching what goes on in the IWM. They are really worth noting out there. Forget about the small consolidations. The larger consolidations, the ones that we want to watch as well. So in this stage of the game, there's nothing here inside the Euro-Japanese yen that says that the market ought to move lower out here, but there's nothing that says we ought to be in a blast-off mode as well. Speaking of blast off mode, let's go take a look at a couple things here. Moving in the pre-markets here, you got Starwood Hotels. It's hot, hot, hot. Its fourth quarter is up. It closed out at 71.23. Ticker symbol, by the way, is hot out there. It's HOT. It is trading right now in the pre-market at 76.70. 76.70. What's that going to do? That's going to take it. Well, it's going to take it above its most recent swing point. It's going to take it into a bit of a supply line out here that began on January 5th. Now, that supply line had volume of about 3.9 million shares. At about the 76 level, there was also to the downside about 5.8 million shares out there. We'll see what kind of volume comes into this equity. What was Starwood Hotels doing? Starwood Hotels was coming back into a swing point. Nice little key reversal and bullish engulfing session out here. That was on the trading session of October the 16th. That had volume of 4.8 million shares back there. Price was coming back into that level with 2 million shares even a couple days ago, coming in hot, hot, hot. That was with 7.7 million shares. That was on today's Tuesday. That was on Friday. Yesterday, it was moving in there with 4.3 million shares. But today, looks like it's going to be in Blast-Off City, and that is ticker symbol HOT, and that is Starwood Hotel. Also moving to the upside this morning, you've got XON as a ticker symbol. That's Interexon Corp. That closed at $30.16. Trade right now at 33.74. 33.74. Well, it makes sense. It's got this nice little high volume high out here, anywhere between 29.28 and the high of $40.49. So that is going to go visit that area out there. Ticker symbol again is XON as in Nancy, not XOM like Exxon Mobil. To the downside out here in the pre-market, you've got coupons. .com closed at $14.51, trading out at $9 out here. If we take a look at what's $9 going to take it to, $9 is going to take it to where? Is anybody going to be in a profit position? The answer there, Johnny, is no. So behind door number 1 is going to be everybody inside coupons.com in a losing position out here. That's a shame. This thing here, when it IPO'd back on March 7th, there was somebody who bought it at $33, and today it's at $9 out there. And they're probably holding on to that thing. Right now, they're holding on for dear life. Don't do that. Use stops. Just use proper money management. I don't care if you buy an IPO. I don't care what it is that you buy or sell. Just always use stops so that you can live to see another day. Also, moving to the downside, Rose Rock Midstream LP. Ticker symbol there is RRMS. Closed at $42. Even Steven. It's trading out right now at even Steven at the $40 level. $40, where's that going to take us to? Well, its last swing point low is $36.66. The high is $38.16. Looks like price will probably make its way down to that level and test that area. This thing has been in a decided downtrend, at least a decided downtrend since a high that was formed up. This looks like a 52, maybe all-time high that was back in September of 2014 when this had traded out at the $63 area level. Right now trading at $40. Right now, we've got the Dow futures. They're up 90 points. S&P up 11. Key level inside the S&P E-mini futures is going to be 2,055. You're trading at 2,054 as we speak right now. You clear that area, and I will say you've got the takeoff on runway 27 north. Keep heading up. This is Steve Rhodes. This is TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 7 points. C's trade out at 17,806. S&P is up 9 at 2,056. Composite up 24 points. She's trading at 47.49. Russell up 6 points, trading at 12.02. The DAX is up 96 points. The FTSE's back 7. Gold off $8 right now. Silver down 18 cents. Light sweet crude off 64 pennies. Lead the charge the upside. Martin Marietta up 14.5 bucks, up 12%. Wyndham Worldwide, WYN, is having a winning day out there, up 6%, up $5. Hot Starwood Hotels up $4.50. Qualys, QLYS up 9%, up 383. Sealed Air Corp up 7%. Qualcomm up about a couple of bucks. Yelp is up $2. Goldman Sachs up $2. Marriott up $1.94. To the downside, coupons.com up nearly $5. Computer Sciences Corp off $4. Amira Nature Foods Limited down $2. Red Hill Biopharma down a couple of bucks. Amazon off $1. Dean Foods down $1.51. Not a ton to the downside. Have some requests here to go take a look at a number of stocks. So let's go do that. Number of stocks. Those stocks being, now I got to go find them. Let me see here. Where are they? Got to click through my stuff. ACM is the first one. So let's go take a look at it. Let me just switch tabs out here. Ticker symbol ACM. Now, the request is to go take a look at it on a weekly basis. So we're going to do that. First, though, going to start off on the daily business. Now, ACM is a construction and engineering company, I'm told, that actually works on the LAX airport. The reason why I say that is because I was talking about the LAX airport during the break there with some folks in the Tiger's Den, as I was reminded here that runway 27 is not a northern departure out there. I picked that up listening to, I was listening to a news story last night. They were talking about there were planes that were flying in and out of LAX, which I have flown in and out of a gazillion times out there, and they were talking about the drone problems up at like 3,000, 4,000 feet out there. That's going to be a problem for sure. In any event, let's go take a look at. So how coincidental that first stock we're going to look at is a engineering and construction company that actually works out on the LAX airport. So what do we know about ACM here? Just taking a look at the daily chart. There's a swing point out here from October 15th. This had 3 million shares traded, and this equity gapped down through that level with about 3.5 million shares on January the 14th. So on the daily chart here, and the request is to take a look at this to see if we could find any kind of potential low-risk buy point. So we're looking for some bottoms out here. So no A to B equals CD down pattern that is completed, because that on the daily basis would take us lower than where this thing has traded to. So the A to B equals CD down pattern that would complete on this would actually take it to a price point of about 23.23. Now, let's switch over to the weekly chart out here. Let's go see if there's anything on the longer-term chart that will help us with this equity. Well, I don't like that. What does that message? Due to technical problems. What do you got going on here? Due to technical problems at the exchange, traded for symbol G through Z at NASDAQ are currently unavailable. That's interesting. In any event, let's take a look at this equity. Now, this thing here had a breakout. Okay, so now we can see where this thing has pulled back to as we take a look at ticker symbol ACM. This thing actually broke out with wide price spread and accelerated volume. That was back on the week of February 4, 2013. That had 9.5 million shares on that breakout. Now, this was pulling back in there with more volume, 14 million shares the week that began January 12th. Prices just kind of hung out down at these lows here on a weekly basis. We've got a bit of a reversal signal here. This is the same kind of reversal signal that the market actually gave to us in March of 2009. Now, it's not as extended, but in March of 2009, if you take a look at it, it's referred to as a three-river morning star pattern out there. It doesn't always have to occur over 3 candles. That's what most people look at. The reality is the stronger ones occur over 4, 5, maybe even 6 candles out there. What is that? That's where you have a big down thrusting candle. That's what you have out here that week of January 12th. Then you've got some sideways movement, typically below the low, or the close, I should say, of the first candle out here. And basically, we had that for 2 weeks. Then you've got a nice big up thrust here. Now, you got to close at least halfway into the body of that down candle, that red candle out there. And that's what ACM did on a weekly basis out here. Ideally, what you'd really like to see is you'd like to see this equity at least come back and test its most recent swing point low out here from January 12th, I would say, or the week that began January 12th. We'll switch back over here to the daily chart out here. You'd like to at least see a test of the low. It's not even a ton of volume down there, but that would be the low here of 2482 with less than 2 million shares, and that would be then if you're looking for a low risk entry, it would be that, because there you'd like to see it then close right back above your daily profile low 2542. That's ticker symbol ACM as a quick peek at it. On the if we also look and take a We also look to see what kind of moves to the downside on the weekly basis out here. Anything else that we've got? Nothing else that really shows up on my screen. Now, the second symbol that we're going to go take a look at here for you is... I got to go back up and find it here. Where is it? CBI is the ticker symbol. So let's go take a look at CBI. I think that's Caldwell Banker. No, that's Chicago Bridge and Iron Company. Here is the daily chart. So as we take a look at Chicago Bridge and Iron, big volume to the downside here on January 30th, 16.4 million shares to the downside. You'd like to see that thing get tested at a minimum. Let me pull this back here. We know that's interesting because I imagine this is the material sector. The material sector has not been as decimated as Chicago Bridge and Iron out here. This is a company been around for a long time. What this has done here is this came back and tested the lows from June of 2012. That had 2 million shares down there, but you tested it with 16 million. So at a minimum, I would say you'd like to see Chicago Bridge and Iron go test those lows. This is the daily chart here from January 30th, and that's down at 32.16. You'd like to see it get underneath it, close back above it with less than 16 million shares out there. Let's put this on the weekly chart. See if there's anything that shows up on a weekly chart for us. See if there was some kind of breakout. Oh, there is. How about this? So now this is a beauty because this on the weekly chart, you've got this little high volume bar. So this really did come back to a breakout on a weekly basis with lighter volume. That lighter volume was the week of that began January 30th, 2012. That was 35 million shares. So the test of that level was with 24 million shares. So there's your test on light volume. So the way that the daily is trading on this, I would say let it come back and test the lows from that whatever was during that week of January 26th out there, and that might give you a nice low risk trade. Of course, you want to make sure that the market is going in the same direction out here. My opinion is that the market is going to make a high next week, and then it starts to move lower. So you want to make sure that you've got the market correct. Now, I don't know that I'm going to be correct on that call. I just gave that to you quite a bit early out here. So there would be just a bit of caution that I would throw into the wind. The next ticker symbol we're going to look at is JEC. JEC is Jacobs Engineering Group out here. So it's all these engineering companies that have been hit. This is the weekly chart. The weekly chart shows that this came back into a swing point on a weekly basis from June 25th, 2012. That had 5.9 million shares out there. That 5.9 million shares was tested back here with 8.9. So all these are coming back with higher volume into swing points. Let me pull this back a little bit further. Anything else out here that this was testing? And the answer is no. On a daily chart, as we take a look at ticker symbol JEC, Jacobs Engineering Group, we got any signs of strength or anything off of the bottom out here? And the answer is no. Volume looks to be pretty ordinary. With regard to this equity, you can truly see it's a downtrend out here. If we take a look at that downtrend, I'm just going to use the tops of the candles right now for the most part. Here is I would have to say, there's your downtrend inside of this equity. I won't worry about where the bottom line is put out here. Not that I don't like bottom lines. This is the daily chart. So this thing is going to need to at least break through this descending price channel, which is up about the 42.90 level. If you're looking for a low risk buy on this, I'd say just use your TAS market profiles, and that would be either pulling back to the it's box out here. The top is 39.72. The bottom is 38.67 out there. That's looking at the daily chart. Let's finish this off and go take a look at FLIR, FLR out here. Fluor Corporation. This too making a low. Let's put this on the weekly first. See if this is coming back in any kind of sign of strength out here. And my guess is that it is. Well, it's coming into a high volume bar, and that was tested on the weekly. Now, I would say this one of all of them is the one that looks the best. FLR is the ticker symbol. Now, the reason why I say that is because this had some volume on the week that began April 15, 2013. That was 28 million shares, and that was tested with light volume. That was tested here with a total of 12 million, then 9 million, and then 11 million shares. So it does not look like this has enough to bust out the lows out here. You've seen the test on the weekly basis here inside of ticker symbol FLR with light volume. So now let's go back to the daily chart out here and see what the daily chart shows us. Now, with regard to trends, you'd like to see this thing at least close above These moving averages 8 and 13. It has not done that. Nonetheless, let's come back, take a look at the daily chart out here, see if there's anything that we see, any kind of patterns that may have completed any kind of bullish reversal signals out here. And the answer is no. So what we can't say about this equity, it's trading above its daily market profiles, its TAS market profiles. These happen to be in bullish mode at this stage. This is saying that it may have a change in trend out here on the daily chart. And it looks like today is the first time you're seeing a cross of the 8 above the 13-day exponential moving average out there. So if you're looking for low risk buys, you might have had it today when it pulled back to the top of that box at 55.58. That was ticker symbol FLR, and that is the analysis on those equities out here. All right, let's go back, take a look at what's moving and grooving in the markets out here. I mentioned Martin Marietta to the upside, trading up $14.82 out here. Let's go take a look at MLM. This is not a multi-level marketing company. Instead, this is Martin Marietta. If we take a look at Martin Marietta right now, it's trading into its swing point from the trading session. It's at least the 52-week high, if not the all-time high. That took place on June 23rd, 2014. It moved up with 602,000 shares on that trading day. You're already into a 727,000 shares. That says that that is not only going to be tested, the high, by the way, which has not been tested, 136.36, likely to be a liftoff level. If you get above that, that sets up an A to B equals CD to the upside inside of Martin Marietta. Key to be watching today, 136.36. That looks jolly good, like a Jolly Rancher out there. Watermelon flavor, of course. That's my favorite. How about yours? If we take a look at what else is moving, that was my first actual business. That's where I started my entrepreneurship. The very first business I ever owned was selling Jolly Rancher candies. I did that in grades 5 and 6 when I was in elementary school. Many of you know that story out there, and those of you that don't, I used to go buy those big bags of Jolly. This is Jolly Rancher is a great foundation for being able to, the whole key to life. There's many keys. One of those keys that should be on your keychain is becoming a great influencer. Now, many people instead use the word, they may, if I threw out the word salesperson, all right, you would say, what's going to come to mind? A lot of negative things. But the reality is salesperson is no more than a influencer. And in life, you got to be a great influencer. If you're going to trade these markets, you have to be the best influencer possible, because it's not me that's going to influence you. You need to be able to influence yourself. If you have a family, you got kids, you need to be an influencer out there. Anything in life, you need to be an influencer at. And that is just really the key. Now, I don't remember, I got the Jolly Rancher. How did that come up? Look, to be in order to sell Jolly Ranchers, what do you think would be the easiest way, in the 5th and 6th grade to sell a Jolly Rancher candy back then? Very simple. You open one up and you put it in your mouth, because those watermelon candies, they let out a fragrance. It's like garlic. It's like putting garlic in some hot olive oil out there, and all of a sudden when you start to get that garlic smell, by the way, when you do start to get that garlic smell, that's when you want to go ahead and put the sauce on there. Otherwise, that whole garlic is escaping in the air. Unless you're going to eat air out there, that's not really good. Of course, this is Chef Steve coming at you. So how could I influence people to want to buy a Jolly Rancher candy? It was really simple. Open one up, stick it in your mouth. Of course, that's probably why I had a few cavities in my day. I didn't realize that there was a cost. Of course, there's a cost to everything in life out there. You just somehow just got to go ahead and pay the piper. But why is it that influence is so important? Because in these stock charts here that we trade, influencing is so important, because I'm going to teach you how you can utilize stock charts. I'm going to teach you how to utilize the VIX index in a way that nobody else has, that will help you to influence. In fact, it's really like card counting out there. If I was going to link the known to the unknown, which is what each of us need to do in order to be able to teach anybody anything in a quick manner, and that's what I'll be doing on Wednesday, tomorrow night at 5:30 for all my newsletter subscribers. Heck, I'll do it for you. You can be a newsletter subscriber for free. It's really simple. Come on over to the homepage at TFNN.com, sign up for it. I'll tell you a little bit more about it. I'll tell you about the card counting that I'm going to be teaching you tomorrow night. And this is I'm only going to teach this once. So it's kind of like one and done out there. So don't miss it. Do not miss it. And I won't teach it here during the radio show out there. There are some things that I just need to keep just simply for subscribers out there. We got the Dow up 94 points, the S&P up 10. But don't let me influence you. Let the charts influence you. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow's up 84 points. S&P is up 9. Composites up 25 points out there. Had a request to go take a look at light sweet crude out here. So let's go take a look at light sweet crude. She's trading back about $1.20 right now, trading out at 51.64. So let's go take a look at it. The individual's looking for a long entry into light sweet crude. So what do we know about this? Let's take a look at the daily chart out here. We'll go ahead and blow it up. We know that light sweet crude made a move, made a high, an intra-session high out here. on the trading day of February 3rd. Now, February 3rd, there were 511,000 contracts that traded on that session. Yesterday, you were pushing up into it with 584,000 contracts. The top of that bar is 54.24. Yesterday's high was 53.99. You got to love it. It closed just below that. You're coming into a swing point with volume. Its message is that it wants to go ahead and at least test that, maybe bust that out. And if it busts that out, then you go ahead and you take a look at a move to the upside, an A to B equals CD. That moved to the upside, by the way. We just take a look at those patterns out here. Your A point's going to be the low from January 29th. Your B point's going to be the high we just looked at from February 3rd, and the C point is going to be February 5th out there. That's going to give you a 1-to-1 price projection of $58. $60.92 would be your 1 to 1.272. So that's the pattern that's underway. The swing point, we're trading still inside that swing point. We're just seeing a natural retracement, the same kind of retracement that we saw back here during its first series, during its first leg. If we take a look at what that retracement looks like on a daily basis here, if we look at retracement from low to high, what we're going to see is that what was actually done was a 0.618 retracement. Our price point was 47.65 was your 0.618 retracement level. Back on the trading session on February 5th, price got down to a low of 47.36. Hey, if it did it once, can it do it again out there? I don't know the answer to that question, but I would say, hey, let's go take a look at that. So if we're going to look at retracements now of this last leg out here, that's from the low here on February 5th to the high of yesterday. Right now, what Light Sweet Crude is trading down at the 0.382 retracement. 51.46 to be exact. Right now, you're trading at 51.51. Pretty decent chance that price is going to come back and test the 49.89 level, your 0.618 retracement. That's also your 8-period exponential moving average. If somebody's going to ask me, where is it that you would take your next stab at going long light sweet crude, that would be it. See if this can pull back. Let it do it with light volume out there. You let it make that price move down to 49.89. Now, here's the deal. If all we see is this is it, 51.46, it only makes a 0.382 retracement. That is super strong with regard to the move out here, and that would be, that's just the message of its markets out there. Now, before we went to that last break, I was mentioning influencing. Most people have played blackjack at one time or another. Can you picture if you had the actual power to do card counting? Card counting. Picture this. The dealer flips over their hand. And their hand, they're just showing one card. And they're showing a jack, all right? Or they're showing a 10. And then you take a look at your hand. In your hand, you've got a 17. However you came up with that number, a 10 and a 7. And now you're just sitting here saying, what do you do? What do you do? Do you hold? I believe the rules of the game, the so-called rules, are that if you've got a 17, you stay on a 17. Right, 16 or less, you go ahead and hit. Now, I'm not an excellent blackjack player out there, but I believe that those are the rules. Assume that those are the rules in blackjack. If you knew that you had a 90% probability that there was going to be a 4 underneath that deck as the next card, would you go ahead and have the dealer hit it to you, even if it didn't come up, if you had a 90% probability? That's what tomorrow night's workshop is all about. I'm going to show you how you can count the cards, but count it using the VIX index out here and stack the deck in your favor. Stack the deck in your favor at certain times out there, and how would you like to learn that? So come to my card counting workshop tomorrow. Get over to the homepage at TFNN.com. Let me teach you something that will last a lifetime out there. I look forward to doing that. Have a terrific Tuesday, folks. Stay tuned. Hour 2 of the Trader's Edge will be up next, or otherwise I'll see you bright and early on Wild Wednesday. Take care, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You're watching Tiger TV.